Welcome back to BLOCKTV, where it is time for Chain Breakers with one of the leading voices in the sphere, with whom we are lucky enough to chat with weekly. His name, Kerner of CryptoOracle, and the man behind Crypto Mondays. Lou, thanks for joining us.
Hey, good to see you, Yona.
All right, well, take us through this week's Crypto Week in Graphs.
Sure. So it's every week I publish something called the Week in Crypto in 5 Graphs that I think tell stories or provide information I think is helpful to put the week into context. I think the first graph in this week's post is from a report by Deutsche Bank looking out to 2030. So that's why 2030 is highlighted there. And I think it compares the adoption rate of the internet to the adoption of blockchain. And as you can see, it actually is tracking very close. And I think this is very positive for the cryptoverse. I think people got very excited, obviously, a couple years ago, said this was going to be huge overnight. And there's something called Amare's law, which is the fact that the impact of all great technology is overestimated in the short run and underestimated in the long run. And so, I think crypto is the same. So I think it's great to see data like this that shows it scaling at the same rate as the internet. We all know how the internet turned out.
Mm-hmm. Yes, I mean, this is very frequent that crypto is compared to many other, game-changing technologies like the internet. But what people don't realize or remember, perhaps, is that the internet didn't really start off looking like it did today. Back in the day, it was merely in between universities and some military applications. But certainly, the internet was not something that everyone had in their home.
Exactly. And even when it did go, even when we got AOL and people started going online, it still took a long time for the numbers to scale into the billions where we are today.
Mm-hmm.
And again, the important point is we are growing our industry along the same lines. I think that's really encouraging.
Mm-hmm. I mean, one of the things that I love watching is if you look at some of those videos where it shows like the old news reports where people are talking about the internet in the 90s and they're clueless, like, yeah, how about this internet thing? I even saw a David Letterman interview with Bill Gates from '95 where Letterman was mocking Bill Gates about what is this internet thing. We all know how that turned out. Now, you could draw direct parallels to Bitcoin and cryptocurrencies and blockchain today. Where people kind of speak about it like, yeah, right, what is this going to be? But I think there's definitely a possibility in the future of those people looking like fools.
Look, I think one of the few things that I'm certain of in crypto is that whatever it turns out to be is going to be different than when anybody thinks it's going to be. Similar to the internet, nobody in '95 was talking about Facebook or Google or AWS. But we got all these things as the technology became mainstream, and we're going to see that with undoubtedly with crypto as well.
Amazing. All right, what's the next graph up?
Take a look at the next graph. If you get it up there, you can see that you got the next graph there.
Yeah, we go.
There we go.
This is a DeFi.
Yeah, and so this is work done by Gray Chain. I think they get a lot of great data. I'm very impressed with the work that they've done. And it's not a graph, obviously, but it's just a bunch of DeFi data that shows how much it's growing quarter over quarter, whether it's the total amount of debt that Gray Chain tracks, it's up more than 20% quarter over quarter. Active collateral, interest generated. We're seeing these things grow, well into the double digits quarter over quarter. And so, we're small today in DeFi, but I think this is really going to be the second killer app in crypto, the first killer app being speculation in Asia. Mm-hmm. And so this is just data that shows, again, that we're tracking, quarterly, significant growth. And if you go out, 4-8 quarters and you continue this growth, we're going to start to see a very big DeFi market.
Mm-hmm. And DeFi, of course, for viewers who don't know, is decentralized finance. And especially blockchain has certainly enabled major advancements, in decentralized finance, especially decentralized loaning and other things of that nature. It's really big to see that. And you claim that this will be the killer app?
Well, I think that this is, if you take a look back at the internet, a lot of people say, like porn was the first killer app of the internet. You can say of crypto, maybe Silk Road was the first killer app that drove a lot of usage in the very early days. And I think really the first killer app, that we saw from an investment standpoint was, was speculation in Asia. And, the money in the industry today is still largely being made by the exchanges, whether it's Binance or BitMEX and such. And so I see that as really the first killer app of crypto. And I think that we're seeing DeFi emerge, and if it continues to scale, this is going to be the kind of the second killer app, and really can be the thing that brings crypto mainstream, to the degree that, I've long believed that, decentralizing Twitter is not the thing that's going to bring crypto mainstream. I think it's when we provide things that people want that they can't get someplace else. That's what's going to make crypto go mainstream. And I think we're going to start to see those products come out of DeFi in the coming quarters. It's really exciting.
Mm-hmm. So now we have DeFi rapidly scaling upwards, but the next graph we have the crypto trading volume on the decline.
That's correct. And so, this comes from the block. Actually, the last few graphs this week all came from the graph. Larry Cermak had a great tweet storm relative to a podcast that he did with Laura Shin. This just tells us, I think, where we are today at the moment in terms of, we obviously saw a lot of volume growth in late 17 into 2018. And now we're seeing volumes come back down to where it was a couple of years ago. And this is, I think, a lot of speculation has left the marketplace. A lot of the gambling, has left the marketplace, but it's still, very significant in terms, of what's going on, but it's not what it used to be. And so, I just think it's data that everybody should be aware of.
And right there, as you can see on the chart, June 2019, seemingly that's where the trading volume peaked. Now, why do you think it was then? Because speculation should have kind of fallen off earlier on. The all-time highs of end of 2017, beginning of 2018 have long been gone. Why do you think that the middle or June of 2019 is really when the trading volumes kind of fell off a cliff?
Well, because that's when crypto peaked. So, obviously, volumes, we see volumes rising generally when markets rise, and volumes falling generally when markets fall. And so, what we've seen is, a market that's down 40% plus since the highs that we reached in June. And we've seen trading fall off about 60% since then.
Mm-hmm, right. So if unfortunately people are really only to trade, you're missing a lot of that speculation. But does that mean that now the trading market is more mature? Is it now going to be less volatile because that speculation is out of the market?
Well, yeah, I think what we're seeing is, the pendulum swinging back and forth. The pendulum now, I think, is swinging to, declining volumes, declining markets. When the markets come back, I think we'll see a return to, dramatically larger volumes than we're seeing today.
All right, let's hope so. Next up, we have a Grayscale Bitcoin Trust.
And this is an interesting graph. You put it up. This is the premium. So the easiest way, whether it's for an individual or an institution to actually invest in Bitcoin is through the Grayscale Bitcoin Trust, which trades on the Nasdaq. So it's very easy, to buy and sell just like you can any stock. And the interesting thing is that all it holds is Bitcoin. And so you can see how it trades. The market cap of GBTC trades relative to the value of the Bitcoin that it holds. So in round figures today, GBTC holds around 2 billion in Bitcoin, but it trades at a premium to that. And that premium has actually been over 100%, back in the heady days in 17. And what we've seen is that when that premium is the lowest, generally is a bullish sign. So you can see that that the low on this was December of 2018, and that was really the lows of the year in 2018. And we saw a tripling of the market from that low, up through June, July, when the premium peaked, and now it's down to a level that's about average to where it is for the year. So I don't think it's a particularly bullish or bearish where it's at today. But again, I think it's interesting data for people to be aware of.
Mm-hmm. And why exactly is there a premium? Is that premium comes just from the the convenience of being able to kind of invest in Bitcoin without having to go through wallets and exchanges? Where's that premium coming from?
It's the ease of and that you can get it in volume, and and it's traded at a premium. People have said that over time, that premium should come down, and in fact, a GBTC has a 2% annual fee. And so, if you hold GBTC for a long time, that's a lot of money that people are giving to GBTC for really not doing a whole lot relative to if you just went out and bought Bitcoin and held it in your own wallet. But again, it's the ease of use that drives that premium, and then the premium goes up and down based on demand.
Right. So once again, that's the ease of an investment. Ease of use of Bitcoin is to hold your own Bitcoin, and you could use it whenever you want. I personally would not pay that premium on top of the fees that they charge. But hey, you know what? Some people just want to get in. Next up,
I mean, what we've seen is that in fact it goes up and down the premium. So you really, I think the 2% fee is steep. That's more than the premium to 2% fee that would keep me awake, because I think the premium is going to hold for some time.
Mm-hmm. All right, and lastly, I think we have the BACT hitting an all-time high.
Yeah, and again, this is just it's small numbers, but we're seeing BACT, which is coming in with futures contracts. The amount open interest, again, it's a small number and very small relative to the volumes that we're seeing at the CME. But what we are seeing is, though small, it's growing, and I think that portends well for for the marketplace. Mm-hmm. It's just great liquidity.
Right, and how much, like you said, this is small. This is small in comparison to CME and all these things. Would you think that BACT, they finally launched? They haven't really hit those big numbers. Do you foresee in 2020 them actually reaching the size of CME?
Well, they're certainly gaining. Again, they're very far behind. And it's interesting to see. Unfortunately, Kelly Loeffler, the CEO of BACT, is now going to be a senator. So that's probably good for the industry. Not great for BACT, probably. But we're seeing sustained growth, and it's and I think a positive for the marketplace.
Well, let's hope that overall there's more positivity for the marketplace, because today has been rough for the prices. Lou, thank you so much for joining us. As always, a pleasure. We'll see you next time. And for all our viewers at home, if you want more on blockchain and cryptocurrency news, make sure to check us out at blocktv.com.
For more news and updates, follow us on Twitter.